Well, hello, Dave Cotter, CEO of Hybrid Debt Fund, speaking about a private credit series. And today we're talking about bridge lending. So what in the heck is bridge lending and why it matters more than ever? So let's make this fun, fast, and hopefully unforgettable. So what is commercial real estate bridge lending? That's the question. Bridge lending is like a financial pit stop. It's a short-term, high-speed capital that bridges the gap between where a borrower is today and where they need to be, usually before they can get long-term financing or sell the property. This is a financial on-ramp. Borrowers trying to buy or fixing or repositioning or even stabilizing a property, and they need speed, they need flexibility, and they need certainty. Traditional banks, way too slow. Bridge lenders, ready to roll. That rhymed. These loans typically last anywhere from 6 to 36 months. They're interest only and are transitional properties. So who the heck uses bridge loans? Well, the typical usual suspects: developers finishing construction or leasing up, investors that are acquiring value add assets, sellers needing fast execution for 1031 exchanges, owners needing quick cash out, refis or some rescue capital, maybe family offices or private equity firms, entrepreneurs, anyone doing deals that can't wait for traditional credit committees. So an example, sponsor finds a 200-unit multifamily asset at 75% occupancy. Seller wants to close in 15 days. A bridge loan provides 75%. Loan to cost, 2 weeks with interest-only payments and enough runway to renovate the property, lease it up, and refi with agency debt in 18 months. Boom. So how big is the market? The commercial real estate bridge loan market is estimated to be 250 to 350 billion with a B annually. So that depends on how you slice it. Non-bank lenders, private debt funds, REITs, family offices, they dominate the space, especially after regional banks pulled back post 2022, 2023. Bridge lending is a huge part of the 1.5 trillion private credit market. Strong demand in multifamily, industrial, and niche sectors like storage or single family built for rent. Why does it even matter? Because timing is everything in commercial real estate, and bridge lenders bring speed to close, creative structuring, asset-based underwriting, and a high certainty of execution. Bridge loans unlock deals that would otherwise die in committee, fuel innovation and momentum in a tight credit market. So for private credit investors, they offer attractive risk-adjusted returns, especially in this market, and shorter durations as well. So often floating rates and built-in protection. So what are the pros and the cons for lenders and investors? Pros are 9 to 12% returns on senior debt, sometimes higher with mezz or pref equity. Short duration, they get paid, get in and get out. Diversification, different sponsors, markets or asset types. And then fees, origination, you've got exit, extension, and it all adds up. What are the cons and what are the risks? Well, there's transitional risk. The business plan, it's got to work. It may not. Market timing, cap rates, interest rates, and rents, they all fluctuate. Execution risk, is the sponsor strong? Is the contractor awake? And there is illiquidity as well. So not publicly traded, so not for those needing quick liquidity. So real life example, a borrower in Austin, Texas needs $18 million to acquire rehab. It's a boutique hotel that plans to maybe rebrand and drive up what they call RevPAR. There's no bank wants to touch this deal with pre-stabilization. So bridge lender steps in with 70% loan to cost, interest only, SOFR plus, call it 550 to 650. So 18-month term and tight covenants. The borrower executes, stabilizes, and refinances with CMBS, commercial mortgage-backed security, 14 months later, and then investor IRR maybe north of 13. Deal closes in 21 to 30 days. So look, final word, bridge lending, it's the unsung hero of the commercial real estate finance world. It's nimble, it's fast, and essential, especially in markets where traditional capital, guess what? It's frozen. If you're an investor looking for strong returns with shorter durations or a sponsor needing execution at the speed of business, Bridge lending is where the action is. So that is your education on private credit for bridge financing today.